Hello and welcome to Big Deal. We are at the IVCA Summit, and on the sidelines of this particular conference, I'm speaking to a whole host of private equity investors. Let's begin with Vishal Mahadevia of Warburg Pincus. Vishal, always a pleasure speaking to you and welcoming you on CNBC-TV18. My first question, given the changes in the global economy with the inflationary concerns as well as interest rate rise, how do you see a changed environment when it comes to investment decisions?
So thanks for having me on, Nisha. It's great to see you, as always. It's a very odd environment globally. I was just mentioning it at the IVCA conclave. Deal making is really, really tough right now. And I think it's what I would call peak uncertainty. You've got geopolitics, Russia and Ukraine. You've got the US-China tensions. You've got runaway inflation, both in the US and Europe. And as a result, the rising interest rates you mentioned, all of those are at a peak uncertainty. There's no easy resolution to any of those that people can easily chart out. So what that happens, it's hard for investors to price that risk. And so it's hard for buyers to price that risk, and sellers don't want to necessarily sell something at a point in time when that risk is high. So I think deal making is tough. And I can't really predict what will happen to interest rates, but it doesn't feel like the tone of the Fed or the direction in which inflation is going will give us respite anytime soon.
So when we talk about India, given these changes globally and the uncertainty, how do you see a change in the strategy for the investors when it comes to Indian investments?
Global deal flow, I would say it's slow, but I think the flip side of this is private equity and venture capital firms have record levels of dry powder. There was a lot of funds raised. I think it's $2 trillion globally. Okay, when that amount of dry powder sits out there, it's a matter of time before deal making starts again, because buyers and sellers at some time will reach that equilibrium of pricing and that risk. Is it 1 quarter? Is it 2 quarters? But I'd be surprised if it was a lot longer than that, unless things dramatically change from here. On India, really nothing's changed. I think India is in a fantastic spot. It's got its challenges. It's not an island when there are issues happening all around the world that can affect India. But we start from a different point. COVID hit us harder. We've recovered better. And we are in that mode when you look across businesses and you look at what's happening. While you'd always like it to be a little bit better, it's actually really, really good compared to what we're seeing across the rest of the world. So very frankly, Warburg's been in India, as you know, for 25 years. We've seen the ups and downs many times, and our strategy remains unchanged. We're very bullish.
Any amount that you're looking to deploy for this year in India?
As much as possible. We are very micro investors, so we don't have a target per se as we look to invest. But you know, we've been investing close to $1 billion a year into India consistently.
And that will continue.
I would hope it would grow, but it's very micro. We have to find the right entrepreneurs, the right companies. But I think all the ingredients are there in India to make that happen.
All right. But also, Vishal, Warburg has invested and beefed up its portfolio in the digital IT space when the IPO boom was just about taking off. And you have made some successful exits and part exits through the IPO, but you still have your portfolio full of some of these aspirants in the pipeline IPO. And your exit really depends on the IPO market, which looks shut at the moment for the digital space, given the lessons that the market has learned over the last couple of years. How do you see that panning out, and is that a cause of concern for investors like you?
So I would say IPO markets that are shut are always not a good thing. You want the IPO markets to be open, you want a robust capital market. It's not a big cause of concern for us, Nisha, because some of the digital companies actually, I would only say I wish we could do more in the digital world. I feel we didn't do enough. And I don't mean that given environment now, we're long-term investors. I think the digital story in India has real legs to it to grow. And in the next couple of years, if we're not doing a lot more of that, I would personally be disappointed. Obviously at the right valuation and where we think we can make returns for our investors, but we are leaning in and liking to do more out there. I think for us, the IPO market is important because it's the next source of funding for our companies. It's very rarely been an exit for us. So what's happened even in the non-digital...
to let the company grow more.
Exactly.
So is that a big spot of bother right now for the industry?
I think for those companies that we're in and that have strong investors in the cap table, they will shine. Yes. Because the IPO markets are shut for funding.
Right.
But when you have a strong investor in the cap table like a Warburg or others, yes, then we are willing to fund that company as long as they're building a good business, doing a good job and continuing to grow. Yes. So they don't have to worry about shut capital markets in the near term to ensure that they have a source of funding to continue to build out their businesses. So I would answer, not really a concern for us with any of our companies. Right. I continue to think of it as an opportunity for us to find more companies that require that funding, where Warburg Pincus can help them grow.
All right, so opportunity to find more companies because interest rate is also higher, IPO market is not looking very approachable, so private equity is likely to play a very big role. But Vishal, as a foreign investor, how do investors now view India? Does the crisis in one conglomerate have any bearing on the investment decisions?
Look, there's a lot of press around this, but for people who know India, including for someone like Warburg Pincus, who's been here 25 years, I'd say no difference. We've seen multiple crises. India always throws out a crisis at you. Yes. We've been here more than 25 years, so I can't remember the last 5-year period where there weren't a couple of good crises to wake you up in India. And I think the way the country is growing, and I think the way business is growing, the way the entrepreneurs have confidence, I just think there's no one crisis that can shake that. Right. We're past one crisis being able to shake India, in my opinion. Right. So we continue to remain very forward-leaning, excited about investing in India and moving forward.
All right, so still betting on India and bullish on India. And Vishal, when we talk about the businesses that you're already present in, and a lot of them are to do with consumption and even financial services consumption, how do you see the on-ground reality when it comes to business? Is it getting impacted because of the impending slowdown that everybody is expecting?
Yeah, I'm glad you asked that question, Nisha. So we have investments in now 30 different companies, and a bunch of them in consumer names you're familiar with, whether it's a Kalyan Jewelers, a Biba, a Med Plus, a Boat. Yes. You can go down the list of Parkson's Packaging that provides packaging to many of the consumer companies. What we saw was a fantastic recovery last year through festive season, a bit of a slowdown, but we're really seeing all signs of business having picked back up. I would say not to the same level of growth as there was there last year, but again, no signs, in my opinion, of a slowdown. You're seeing a very strong consumer demand for organized, branded, good players. And I think the better the player, the more they have omni-channel strategies, the more they can reach digitally to consumers. You're seeing them continue to get share and grow even better than the market. So we're seeing really good traction there. Yes. And the other one you asked about is financial services. I just think it's a golden time for financial services. They got killed in COVID, right? A government said moratoriums, credit, there were large losses. And they've come out, and the books that they've built, I would say the private NBFCs and the banks as well, are a level of quality better than the pre-COVID books. And you're seeing that in credit metrics. And I think it's secular. You're seeing a little shift in the behavior of consumers and SMEs because credit bureaus are there. You don't want to default anymore. You want to make sure you pay your debt. So small changes, I think, in a secular fashion really make us continue to be bullish on financial services. All
right, so very bullish on financial services. In fact, golden period for financial services according to Warburg Pincus. And also you see the demand pick back up in the consumption space. So no inherent ground pain at the moment that you are seeing.
The only thing I would point out as an issue where everyone's going to have to think of is when the global environment's tougher, liquidity will become tougher.
Yes.
So I think that is a challenge, less for consumer, but I would say for financial services companies, ensuring they have very strong franchises. If you're a bank, a deposit franchise. If you're an NBFC, a large group of lenders, and enough liquidity and well capitalized. I think those are the companies that will succeed in this, because you have the golden environment, but you still have to have the funds to succeed in that. And I think that is the challenge that always remains top of my mind, and we're always talking to our companies about to ensure that they have in place.
And Vishal, every year there is always a theme that you as a fund house are more interested in than the others. So what is that one secret sauce that you're focusing on for this year, which is undervalued and is good for investments in your view?
If if I tell you on your
You must be
program, it won't
already
be a
working
secret
on
sauce
it.
anymore, Nisha. But I think value is hard to find today in this environment. And it comes back to my first comment, which is with interest rates having gone up, with risk being more across so many different factors, I think sellers have not yet adjusted to the fact, including, I would say, as Warburg Pincus, we have companies that are on the exit path. I think sellers have to adjust and buyers have to adjust both. I do think, though, that there are a few sectors, and I talked about consumer, and I really talk about the digital first brands, about getting to the consumer in a different manner, because tastes have changed. There are certain habits that are not coming back post-COVID. The desire to go to brands, the desire to order online, that's not going backwards to change. So I clearly have a soft spot for financial services. We at Warburg Pincus do for many, many years. And I think there's real value to be found in both of those over the coming year. And the last I'll say is India as a country needs very strong champions that I think can be global champions. IT services, it's proven, right? We built global champions that provide IT services. I think you're seeing start of that in some software companies. And I also think you're seeing the start of that in some manufacturing businesses. So we've invested in a fantastic medical devices company called Merrill Life Sciences. And they're producing really technology-based medical devices, not only to India, but around the globe. So India as a supplier of really, I would say, engineered technical products around the globe, I think is something that I see as a real opportunity.
When it comes to financial services space, Vishal, it's actually a very large portfolio. You have investments in banks from IDFC First Bank. Then you also have covered the insurance space and NBFC. What about the fintech space, which is actually a large space which has been hit hard because of the regulatory changes, especially the credit giving companies? So which part of financial services are you most interested in?
Any financial product that goes to the retail customer in India. And I think fintech is a much used and abused word. And I actually think of fintech as a financial services company that is using technology to get its products to the company cheaper, distribute its products in a low-cost fashion, scale faster, right? But it's not a technology company that's also trying to do lending or trying to do finance. So I go at it that way. I think that's our mentality at Warburg, and I think that opportunity remains large because India remains underpenetrated. I think banks will be very important to do. As you said, we're in banks, we're in insurance companies, we're in NBFCs, we're in the mutual fund industry, but we are an investor. So we will find more entrepreneurs that have a different niche. So a few years ago, you would have asked me, I wouldn't have had the answer for you, but we invested in Avance, which is providing education lending. I mean, it's a fantastic company. It's really hard for banks to do. It's really hard for people to build over a period of time, and a terrific team that's built it. So I think you will find these areas where you can use technology and where you can go and attack financial services. That's what our on-the-ground presence hopefully allows us to do.
All right, Vishal, on that note, thank you so much for joining us here on CNBC TV18. Always a pleasure to have you on the show.
Thank you for having me, Nisha. Good to see you.
All right, with that, we'll slip into a short breather, but more investor views coming in on the other side on Big Deal. Stay back, you're watching Big Deal, and on the sidelines of the IVCS Summit, I spoke to a whole host of investors. You heard Vishal Mahadevia being bullish on India, but being also uncertain about the deal environment currently, especially because of the changing macros as well as also the volatility that is taking place in the valuation front. Hear out some homegrown investors as well on their view on investments in India. We have with us Manish Kejriwal of Kedaara. So Manish, happy to speak to you. Always a pleasure to welcome you on CNBC TV18. Looking at the macro condition and the economic concerns that most of the people and the economists are raising, what is your view as an investor for this particular year, globally as well as for India?
Firstly, great to see you, Nisha. Great to be here. This is by surprise, but always good to see you at all times. I think, we'll do the two separately because I think the perspective is quite different. If you look at it globally, I think the biggest issue, in addition to obviously all the G2G troubles coming out of Russia, Now the US, China issues, Europe being in a bit of a slump. The US economy really is what's keeping stuff alive. And there also you've had issues around the venture and the early stage and availability of capital. But the single biggest issue globally has been inflation, if you keep the G to G aside. And here I think it's quite different. In countries like India, we're already used to a 5 to 6% real inflation rate. Maybe it's 200 basis points more right now. We can live with it.
Yes.
Though we are seeing the impact of that, especially in our portfolio in rural India, and especially at the lower end of the pyramid. The bottom, not the bottom of the pyramid, but the lower half of the pyramid is where the inflation is really hurting. We've seen consumption, but I think that's temporary. Globally, inflation is a huge issue because countries used to 0, even negative rates of inflation like Japan, to 3% to Europe or the US, now have an inflation rate almost 2x or sometimes 3x that amount. That leads to higher interest rates, lower availability of debt and credit, and hence deals in private equity are going to be much more challenged. So I think overall, India, a bit of an issue, but I think we'll get over it. Globally, inflation is a massive issue.
And what about the investor sentiment for this year in terms of investing, and also exit options have also squeezed because of the volatility in the equity market? So how will the private equity space really behave, expected to behave for this year?
Now we'll keep it to India only, right? Because globally this will be too complicated.
Yes.
So in India, I think the bane has always been exits, right?
Yes.
I think the good thing we've seen the last 7 or 8 years for the industry as a whole, compared to a decade ago, the level of exits, the DPI across the board on average has increased tremendously.
Yes.
But the issue which is really hidden behind, Nisha, is it's bimodal.
Yes.
Some funds have shown DPIs of 300 to 400% on a fund. Others are at 0 or even single digits. So I think what's going to happen, and we're already seeing this at least in the late stage private equity side, is capital is going to the winners.
Yes.
The winners and the non-winners are being separated. It's bimodal.
Yes.
And there'll be no dearth or no shortage of capital for the funds which have a high performance, shown great DPI, on fund 2, 3 or 4, and most importantly, who've institutionalized their firms.
Right.
It doesn't matter, and these teams are now not relevant or reliant on any 1 or 2 people.
Yes.
These firms will run forever.
Yes.
The other firms, at least in the PE space, will be more challenged who haven't shown returns.
Yes.
The VC space is very different.
Yes.
I think there are clearly 4 or 5 very strong performers, but I think the jury's still out there. And will there be, like in PE, there are 2 or 4 names.
Yeah.
In VC, there are 4 or 5 clear winners, but there could be 10 or 15.
Now, how do you see the timeline for which this particular phase is going to be a difficult phase for the tech digital world?
I actually think the corollary is true. If I look at what's attractive about India, the tech stack is phenomenal, right? I mean, that's created the base, and what the government has done on that front is truly miraculous, right? It started off with a whole bunch of the different initiatives that we all know about. If I look at the last 2 years, we actually almost deployed nothing in 2021 because we were irrelevant. There was capital available, plenty.
Yes.
You had many of the global guys coming in without using any names, we all know who they are, who deployed capital at crazy valuations.
Yes.
Suddenly in the middle of 2022, or maybe around April, May, when there was a crash globally and India also felt that and people started pulling money out, is when we became relevant again.
Yes.
So many PE firms, ourselves included, not surprisingly, had a very benign 21, early 22, and we've done a series of deals in 22, only because our perspective on valuation hasn't changed like the mood or the weather. We've remained consistent. The numbers we offered for the same company in 21, which we were thrown away for, we were welcomed back with open arms. So I think that's the big change. We haven't changed our mode at all, but the context has changed, where we feel a lot more relevant, especially when you come with not just capital, but lots of other skill sets, whether it's operating partners, you add value in a company becoming an IPO. I think even the entrepreneurs in India, who I think have been the most important reason why we all come back and lived in India. It's exciting. It's not a job. You're enjoying every moment of this, of living, right?
Yes.
But even they have matured over the times.
Yes.
They're seeing the difference like LPs are between those GPs who add value, those GPs who are just there for a free ride.
But valuations are very, very important right now, and they have been volatile, Manish. How do you see this particular year in terms of volatility in valuations, and especially in the digital space, which is something that all the private equity players look at very keenly? Is it going to go through a major crash and cash and burn, so to say, and then there'll be a few casualties as well? How do you see the picture for this year?
So Nisha, if I could truly predict the future, I wouldn't be here. We would be playing on those slot machines. But all jokes aside, it's tough. I think it's going to be a challenging year. I think what companies got used to in terms of a burn rate, it almost reminded you of 2001 or 2000, right? The eyeball culture had come back to a certain extent. I think now people are looking at fundamentals, unit economics, what is the real TAM,
and asking what's the bottom line, which should be the first question.
Exactly. And,
right?
But the bottom line, in my mind, can be delayed, but it needs to be there eventually, right?
Yes.
And I would say we ourselves at mostly smokestack industries, we started looking at the consumer tech space, done very few investments, but there were a couple of team members who really believed in this and convinced the rest of the organization we should look at it. So I think so we do tech and non-tech, consumer tech, we do financial services, et cetera. But in tech especially, what we have been spoiled with the large global players is corrected to a certain extent. It might change again. But I think the discipline has now come in where for at least guys like us, this is a much better environment to deploy capital behind. But the resultant will be, again, a bit like what I was saying about GPs. There'll be winners and losers. So in every vertical, let's say there will be market leaders who will consolidate their position, have no issue raising capital, whereas the others who were burning money, who did not have a viable plan in the first place, will go away and shut down.
All right, your sectors of choice for this year.
I, as you know, since my days in Temasek, love financial services. For me, and that's what I said in the panel, to me, financial services is a proxy for the country's growth, right? So to me, we're focusing on that, of course, but not just lending businesses, but also insurance, also asset management. We also like tech and technology services. We have guys like Pramod Bhasin working with us. We've done a couple of deals in that space. We've also done a couple of recent things in the healthcare, pharma healthcare services side. And lastly, the whole consumer tech space, where historically and even currently we've always been nervous on valuations. But I think what happens is, even in those situations, I hope we never overpay. But the beauty on India is, even if it's no matter what the deal is, the underlying thesis is growth. So even if you slightly overpay, I'm not saying we want to go down there, then you can make it up. Maybe you hold the investment 1 year longer. You'll have the same MOI, maybe a slightly lower IRR if you've paid too much. But the underlying growth remains, right? In my mind, the crazy valuations, that's history.
All right, so those were the investment views coming in. There are macroeconomic concerns and changing valuations, and very dynamics are really changing. It is likely to be a little difficult year for deal making, and also the deal flow slowdown is looking evident at the moment. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.